Ripple XRP holders, in this video, we're going to be talking about the XRP exit plan. Ripple's chief financial officer steps down amidst the SEC lawsuit. What does this mean? Is this a big deal? The bond market's notorious indicator is correctly signaling a coming recession, and the Federal Reserve has made a major mistake. And according to the Wall Street clown Jim Cramer,
Mr. Bitcoin is about to go down big. I just can't get on I can't be in something where Mr. Bitcoin is about to go down big.
So we're going to get into the charts. Is Bitcoin actually going to go down? What is coming next for XRP on the XRP to the US dollar price chart? We're giving you a macro market outlook for XRP along with an XRP price prediction, talking about the housing market as well, what the Federal Reserve is trying to do to stop an economic hard landing, getting into home prices and the best way to accumulate wealth so you can afford real estate during periods of rising interest rates, the 10-year to 3-month Treasury inverted yield curve, when this will return back in the positive, what this means for the rest of the markets, and is the XRP price already predetermined by the IMF? We have to play this video at the end of this that you are going to absolutely love. So comment 777 if you're feeling blessed, if you're feeling bullish, if you're going to become the first millionaire in your family tree. You know what to do. Take that like button and just tap it in, give it a tippity taparoo, sink the putt. You're doing it for grandma to beat Shooter McGavin and buying grandma's house back with XRP. Let's run it. All right, bull runners, welcome back to the channel. So XRP sitting at 48 cents right now with a $25.9 billion market cap. We're talking Billy here, 9.75% down for the week. Bitcoin's down 3.98%, Ethereum down 5.76%. And if you look at these charts, the majority of them are all in the red here for the week. And so if you're diversified across the crypto industry, you're taking a hit on the week, anywhere from 1%, 5%, 7%, 3%. So your portfolio is not doing too hot, but how do you grow your wealth and how do you preserve your wealth if you're in crypto? If everything takes a hit during times like this, what do you do? Well, by the end of this video, I'm going to talk about some powerful stuff to help you guys out here. But I do want to talk about the news and what's taking place and why this is happening and what the Federal Reserve is doing. So the first thing that we're going to talk about is what's happening with Ripple, because Christina Campbell, the chief financial officer, has left the payments platform for a comparable position at the virtual healthcare provider Maven Clinic. And according to her LinkedIn, her employment at Ripple ended this month in October after more than 2 years without explanation, other than a memorable time at the crypto firm. She joined Ripple in April 2021 after more than 4 years as CFO at payments platform PayNearMe. And while healthcare is a complex, highly regulated industry like fintech, it's new to me, she said. And so Campbell's announcements came amidst Ripple being engaged in this legal battle since 2020. So maybe it's personal reasons, maybe it's family reasons. I'm sure that it's not going to be hard for them to find another chief financial officer. And so we'll see who they hire and what they end up doing for that. Looking at Bitcoin right here, Bitcoin's sitting at 180 days right now since it reached the peak of April of 2023 and then saw a sell-off back down to the 200 moving average and the 50 moving average. Now, if we compare back to 2015, this is interesting to look at because 205 days into this rally, into this consolidation period from Bitcoin rallying up to $500, consolidating sideways, then breaking out upwards of $700, nearly $800. It took 205 days. So another 25 days, could we see a breakout for Bitcoin in November? Or would we see a sell-off for Bitcoin down to this support range right here that it struggled to break out from February of 2023, and it's acting as this was resistance, now it's acting as a massive support. If we were to see a sell-off for Bitcoin leading up to the next FOMC meeting coming in about 20 days where they decide interest rates, then if we see a sell-off down here, I would expect a bounce off of $25,000. So if we keep seeing bullish momentum for Bitcoin to the upside, then the resistance is going to be, at the high. Resistance right now is like $28,600. Other than that, it's the current high of the year. And so I'm not expecting anything too crazy to happen for Bitcoin in the crypto markets. These little sell-offs is nothing, like a 3%, 5%. It's nothing to worry about, unless we break $25,000. If we broke $25,000 as support, then we're talking some staged event, black swan, potential war, lockdowns in the United States. Then people would start to freak out for Bitcoin. And then that's when the whales would start pouncing on the markets and buying down within the, setting the limit buy orders down within the $21,000 to $22,000, all the way down to even $19,000. But we're not even there yet, so there's no reason to even talk about that. We're just going to consolidating sideways right now. And Ripple's trial with the SEC is scheduled to begin in April of 2024, and it will come in the same year as the other high-profile cases affecting the crypto space right now, including the second criminal trial of former FTX CEO Sam Bankman-Fried in March of 2024, and the trial of former Celsius CEO in September of 2024. So it's unclear if Campbell's departure was related to any regulatory scrutiny Ripple is facing in the United States, but the CEO, Brad Garlinghouse, advised startup firms to avoid the U.S. as recently as September, while Chief Technology Officer David Schwartz said the tide is turning in regards to regulatory uncertainty in the country. And Ripple is currently winning the fight right now. It's only a matter of time. It's just being delayed right now due to the lengthy legal process. Now, if we look on Twitter, Egrag Crypto says XRP God Candle incoming. He posted this back on April 2nd when XRP was at 55 cents, and he put a price target for $1.12. And so what happened there? Well, if we look at the XRP price chart, we saw XRP go from 50, 55, 57 cents, see a sell-off down to 41, and then the lawsuit decision brought XRP to 92 cents, almost up to what he predicted. It was a little shy of that. But then, how much was it? It was about 15%. So what's on the horizon now? What is he saying? So he was close. He was just off by a little bit. And currently, XRP, from a structural perspective, XRP managed to break out of a descending wedge pattern, but it encountered a significant obstacle at what he's calling the Berlin Wall at, if you see right here, it's 55 cents, 0.5574. And currently, XRP might hover just below this crucial resistance point. However, there's an intriguing twist, the potential for a black swan event. If such an event materializes, it will be cushioned by what he likes to call the box of iron. All right, box of iron, with the price action resembling a wicking process. In his personal assessment, it's reasonable to anticipate that 41 cents could serve as a solid support level for the foreseeable future. Now, this is interesting because I just saw this today, and this is what I was telling you guys in a previous video. That's what I was expecting too, which is the upward trending, close to the upward trending support line as well too. So when we go back here to the XRP price chart, this is the box of iron from like 35 cents all the way to 41 cents to the upper echelon of it. And then also we see the upward trending support line right around roughly 41 cents. For XRP, there's a few scenarios that could take place. And when I zoom out in the macro by the end of this video, I'm going to show you guys based on the RSI what is happening here, because we saw the upward trending resistance on the RSI, the upward trending support right here as it stayed within this bullish channel since June of 2022. But the recent sell-off at the speed and the level that we saw from 94 cents down to 43 cents, it brought the RSI down below and breaking below the support. It retested it as resistance and bounced off of it to the downside. So I want to talk about the most likely case scenario to happen next, because zooming out here, you can see similar things happening in the past. You see the upward trending resistance, upward trending support. We saw it break below the support several times, and I circled each of these times for you guys. So the first time that this happened was back in February of 2017. After we saw this break below support, we saw XRP quickly go back up on the RSI, and simultaneously it rapidly rose in price right here. So that's scenario one. We are just days or even months, a few months away from XRP, them flipping the switch and XRP taking off. That's scenario one. That's the scenario everyone's been waiting for. Scenario two is more like September of 2019, where XRP saw a sell-off from the high, and it just kept seeing the sell-off followed by dead cat bounce, sell-off, bounce, sell-off, bounce. This capitulation phase right here before a final capitulation for the black swan event coming up. So this is scenario two, where we saw XRP break below the support on the resistance, come back up to test it as resistance, and then crash one more time and drop below 30 into drastically oversold territory right here at about 18 cents, rally up one more time to about 35 cents, and then crash again for the black swan event in COVID, and then form a new support and resistance for the RSI, do the exact same thing again right here. When the lawsuit was filed, the price crashed down, and then simultaneously we saw all of the money flowing into the markets. The Bitcoin was rallying up, and so XRP's price rally, regardless of the lawsuit, was funded and fueled by the overseas markets, by the Asian markets over in China, all the other countries that didn't have the SEC and they could trade XRP. The only country that really delisted XRP was like Coinbase and the US exchanges, but all these other countries could trade it. And then a lot of people figured out ways, not financial advice, obviously, but a lot of people in the United States figured out ways with their VPNs and all the stuff that they were doing. And so we saw XRP's price rally back up drastically. And so 2 out of the past 3 times XRP's rallied. Now, this scenario right here before the black swan event. So if we were to see a black swan event, it would look something like this, where we would see XRP, maybe a little bit of a rally and then drop down to, 35, 40 cents, somewhere around here, and then struggle to break out of here, but eventually break out of here over the next few years. So that's scenario 1. Well, scenario 2, the most likely case scenario, would be something more like this, where yes, we could see a sell-off down to 41 cents, somewhere around there on this upward trending support, but eventually we see a break to the upside to retest this downward trending resistance. If I were to draw from the all-time high to the high of 2021, right around $1.30, $1.20 to $1.30, we see a consolidation period for an extended period of time. Bitcoin goes through the halving event. This is what I would expect. Bitcoin to go through the halving event and the markets to consolidate, maybe even see a dip after Bitcoin's halving. But then with the following 12 months, we see massive price appreciation. No guarantees, but drawing from the all-time high to the low of the Black Swan event, a full extension of a 4.236 is $13.88. And so if XRP were to pull a full extension, realistic price prediction here, well, that could be $13.88. There's no guarantees, obviously. That's just what the Fibonacci retracement tool is showing. And so if we drew the Fibonacci retracement from the high of 2013 and we drew it all the way down to the low, XRP did a full extension, then it consolidated right here. Right? It rose to 42 cents, and then it pulled another massive rally from there. So could we see something even similar to that happen, where XRP rallies up to the 4.236, we see this consolidation take place, and then we see a final blow off top even higher than that, close to like $30 or even $100. Is this a scenario that could take place? Well, that would require massive liquidity from global banking transfers, them to make the decision that they're going to use XRP or XRapid instead of like their Nostro, Vostro accounts, the predetermined price, rumors. A lot of this would be based off hype. A lot of this would be based off excitement, clarity of the lawsuit, XRP to have what they need. And then ultimately, the fear of the recession going away as the Federal Reserve is quantitative easing again, and that inflation would be going crazy, and then the crypto markets would be surging. So what does that mean for the housing industry? Because Jerome Powell has been urged to stop raising interest rates, or he's risking an economic hard landing, which would hurt the stock market, which would hurt the real estate market, and it would hurt the crypto market as well too. In recent days, several officials have noted that the central bank could be in a position to hold off on further increases as it assesses the impact the previous ones have had on various parts of the economy. So there appears to be little appetite for easing right now, with the benchmark Fed funds rate now pegged in the range between 5.25 and 5.5%, its highest in about 22 years. And so prices, at the same time for the housing market, it's suffering through constrained inventory levels where prices have jumped nearly 30% since the early days of COVID, and sales volumes that are off more than 15% from a year ago. When we look right here at official data from the Fed, though, the average sale prices of houses sold in the United States at the peak right here, quarter 4 of 2022, was $552,600. Right now, we're about $495,000. So if people are like, this real estate housing market crash is coming, it's already happening right now. We're in it right now. Compare this to 2007 to 2009. Well, we saw quarter 1 of 2007, the average was $322,100. By quarter 3 of 2007, it was down to 301. So if I just do quarter 4 of 2022 to quarter 2 of 2023, we're down 10%. It went all the way down 20%. So we're just getting started in the housing market right now. It's going to take some time to get out of here before we pass the all-time high again. It might take a couple years. I guess it might take by 2025 to 2027 to 2030. You guys see, before it ever even passed the high of 2007, $322,000, how long did that take? That took until quarter 3 of 2013. So 7, 8, 9, 10, 11, 12, 13, 6 years. So that took 6 years. So if we were to go from the top, 2022, 3, 4, 5, 6, 7, 8. So by 2028 to 2030 is how long it could take to recover. And by then, by 2030, we're going to be at $50 trillion in gross debt. that $50 trillion, a large chunk of that will be in the real estate market. So I would expect the markets across the average sales, right? Different markets have different prices. Like I'm in Miami, Florida right now, and like prices are going up. So if you're in a hot area where everyone wants to move to, this is going to be looking different for you. But on the average, conglomerating the whole country, it's down. We're already in a crash right now. So the federal funds effective rate, we're in a pause. This pause that's taking place, it's just started, right? The next meeting, if you want to know what they're going to do the next meeting, rather than guessing, let's just look at the CME Fed Watch tool. 91.4% are expecting a pause. So most likely case scenario is another pause. So when will the Fed pivot and lower is the next question, or will they continue to raise? And if so, how many times are they expected to raise? Because by December 23rd this year, 72% are expecting another pause. By January of 2024, 69% are expecting a pause. By March of 2024, 56% are expecting a pause. Then it split 18%, 22%. But the majority, let's see when everyone's expecting to lower. We're starting to get there by May of 2024, where it's 42 and 36%. By June, that's when it's expected to lower, the Fed, by June of 2024. So we will most likely see the Fed stay within this range, just like they did right here, or we go max on the chart, like this, from 2006 to 2007, right here within this range, where they just held the line and then they started to lower. Yeah, they could go up one more rate, kind of like they did from December 6th to January of 2007, right? December of 2006 to January of 2007, you saw a little rate bump up, nothing too crazy. So the Fed is watching the jobs market, they're watching the GDP, they're watching the CPI, they're watching other data, right, other than just inflation. And we're going to see what happens with inflation once the next report comes out. If it goes up, then, hey, they could raise it one more time this year, and those percentages on the Fed Watch tool could change. But I want to talk about what this means when they do pivot, because it's called the inverted yield curve, right? It's still correctly signaling a recession coming, even as optimism grows for a soft landing. And arguably, we're already in a recession. The Federal Reserve is making a major mistake in its war against inflation, according to the economist who popularized the bond market's notorious economic indicator. His name's Campbell Harvey. He's a Duke University finance professor who coined the inverted yield curve as an indicator of a coming downturn in 1995, doubled down on the accuracy of his famed recession gauge. In an interview with CNBC on Thursday, he said that the curve, which measures the difference between the 3-month and the 10-year, right? There's another, you can measure the 2-year to the 10-year, but in this case, the 3-month and the 10-year treasury yields, has correctly predicted every recession, every single one, since 1968. That's crazy. It's 8 for 8. So will it be 9 for 9? Right now, if we're looking at where we are, we bottomed out on the 3-month to the 10-year in June of 2023, or like May of 2023. We're at negative 1.89, and then we look right here, negative 1.89, about the same. So the first time it did that was May, and it's trading upwards now. So that means that the 10-year is rising in relation to the 3-year, right? So it's going to be going into the positive. And how long will it take before that happens? Well, if we look in the past right here, the last time that we went inverted, it's roughly 13 months from inversion until it goes back into the positive. And we see back in the 2006, 2007, by the time it got to 2008, and by 2009, we were already up at like 3% in terms of the positive. Back here at the 2000, the dot-com bubble boom, and all the way back here in 1989. And then the chart could go even further back. So the key thing to look at is some market forecasters have warmed up to the idea of a soft landing, right? The closely watched recession gauge is still likely correct. And Harvey's saying that even though a downturn hasn't struck yet, that's because the yield curve inversion typically lags behind the start of a recession, with the average wait time over the past 4 recessions being 13 months from the start of the inversion to the start of it to going back into the positive. The curve officially inverted on October 26th that you can see of last year. So Fed data shows, meaning the recession signal is just a few days shy of the 11th month milestone. If history is any guide, that would put the start of a potential recession sometime in December or January, December of this year or January of 2024. So it's coming in a few months. And though the yield curve is flattened and it's starting to go up. It's inversion over the past few months. That's typically behavior in such a flattening that has preceded the last 4 recessions. The indicator is 8 out of 8 when predicting recessions, and it doesn't have any false flags. So it's way too early to say this is a false signal. Maybe it does turn out to be a false signal, but you can't say it's a false signal when you're not even at the average. So it's worth noting that similar recession indicators have been known to flash false positive, right? The other famous spread is between the 2-year and the 10-year treasury notes. It's correctly predicted every recession since 1955, but an inversion in 1960 was not ultimately followed by a downturn. So, the majority but one. So that's the one black swan there. So when we look right here at the US 10-year sitting at 4.5883%, we see this bullish channel right here, and it was an oversold territory at 77. We saw a sell-off right here. The last time we were at 70 plus was April of 2022. Before then was March of 2021 when we saw a sell-off. So this is dangerous territory right here. Someone say we've already topped out. We're not going to reach the peak of nearly 4.9%, and we are at the peak right now. This is what some people are saying. If we push further, how much further are we going to go? 5%, maybe up to 5.2, 5.3, and then we start coming down. I talked about this, right? It's going to start coming down. I could be wrong here, but once we break this upward trending support right here, that since April of 2023, April, May, June, July, August, September, October, 7 months, we break it to the downside, we come back up to retest it, and then we drastically fall in the RSI. I would expect something like this to be the most likely case scenario because we're at 67 on the RSI, and close to 70 or above 70 is oversold. We were at 78. Now we're coming down from that. So common sense would suggest that we're in for a crazy time. But what is the end game for this? What are they planning on doing? CBDCs is what they're working on right now. Listen to this.
Actually, 2 other points, but the last one is, as an FMI, we need central bank digital currency. So today, an FMI settles in central bank money for good reasons, to make sure that we reduce risks and counterparty risk and have a bankruptcy remote asset for settlement. And we don't have that today. So in our case, we're using tokenized Swiss franc and tokenized euro, which is things that we create based on cash that hits our account at the Swiss National Bank, and then we tokenize SDX. So there's an exposure to us. The good news there, in Switzerland at least, is that we will be starting with real-life transactions in CBDC by the end of the year, meaning that the Swiss National Bank will be the entity deploying Swiss franc in tokenized form, so CBDC, on our infrastructure for settlement. So that's a barrier that is lifted. It's going to be a 6 months trial to start with, but it's promising, and I think other central banks are looking at that, and I think it's really important, at least for FMIs, to play. And the last one is mindset. I think this is such a paradigm shift that it's very difficult for most people in our industry to comprehend what I've just explained in my first response, the potential of that technology. Because we're so used to what we do today that we sometimes tend to not be open or able to look at what the potential could be in a very open-minded way. And I think that's also something that will be changed.
I used to work for Swift. I was Swift for 20 years, so Swift is flowing through my veins. Swift is the preeminent messaging system for the financial industry. And I think we're also seeing that Swift are changing their network capability so that real time will be a possibility as well. But we may also see Ripple XRP moving across the Swift network as a currency when we're perhaps using something like FX.
So will CBDCs compete with XRP, or will XRP be able to help them facilitate the CBDCs by allowing liquidity for these central banks? Because we don't need more cryptocurrencies. There's so many layer ones. There's so many projects. There's 1.8 million cryptocurrencies, and it's out of control right now. Most people don't know where to put their money into these projects, and you don't want you to get your portfolio wrecked. One of the safest plays is obviously, Bitcoin, Ethereum, the top 10, BNB, XRP. XRP isn't, out of all of these, XRP isn't going anywhere. They have too many partnerships. The signs are all there. All the companies that are working with Ripple, and XRP is just waiting. That's all it is. It's a patience game right now. So instead of just sitting there and sitting on your bags, and instead of buying and trading, buying and selling, trying to time the markets, right? The old saying is so true, where time in the markets beats timing the markets. What that means is when you're trying to time your entry and your exit points as a day trader and you're brand new, you're going to have to make mistakes, and then eventually you'll start to make money if you do it the right way. But if you just spend time in the markets long term and you just hold, and the money moves from the hands of the impatient to the patient over time. So while you're patiently holding, you need to make more money on the front end. So if you want to learn our best ways to make money without any crypto trading experience, without any stock trading experience, without any investing experience, and you want to learn the best business model, we're about to launch our financial education platform. And all you have to do is go to bullrunners.com, put in your best email address. You'll be subscribed to our video newsletter to get the best information to help you prepare for the worst that's yet to come in this economy, because we're backing up our truck all the way to the bank. We're grabbing the bags, packing them and stacking them, leaving no bags left behind, because we believe the spending power of the dollar is going to continue to go down in value. That's a fact based on inflation. And bull runners, blockchain technology, distributed ledger technology is going up in interest. That's the truth. And together, we're all going camping, you know where, on the beaches of the moon. So I'll see you on the next video. I'll see you on bullrunners.com. As always, stay bullish.